Moving on, Transrail Writing reported a strong set of Q3 numbers, with its margins expanding and profit rising 92%. To discuss more on the company's quarter gone by, we are joined by Randeep Narang, the MD and CEO at Transrail Writing Limited. Thank you so much, sir, for joining us. First up, last time you joined us, you just declared the Q3 results around 15-20 days ago. So you had mentioned that the top line that you're expecting to grow FY25 at was close to 30%. You had given us a margin guidance in the range of 11.7 to 12.2%. Are you on track? And what will be the PAT percentage at the end of Q4?
So we are absolutely on track, as we had mentioned 2 months ago. We are on track. Our revenue growth is around 30% over last year, which is going to happen. As you see, the Q3 results are also in the same vein. We have grown by 25 to 26% over last year. And our EBITDA margin profile will be 12.5% as we had forecasted. Our PAT would be around 5.9 to 6% is what we are looking at. As currently we are at 5.9%. So that's the forecast. So we are on our guidance and we look forward to delivering good numbers this year.
EBITDA margin, Randeep, hi, Rima here, will be 12 to 12.5%. Is that correct for the full year?
So we are at 13.1
yes.
now. So we are looking at 12.5% plus. We still have a quarter to go. And
but are you anticipating some margin pressure to kick in Q4? Why you're not confident to hold margins above 13% for the full year?
I would rather talk about 12.5% plus and over deliver. That's the way I prefer to position it. And of course, we have a lot of work in terms of project execution happening in this quarter. So that's the way it is. And definitely we are confident to achieve what we are doing.
Mr. Narang, the other question that we want to understand from you is, current order book, excluding L1, is close to 11,500 crore. What is the current L1 position? What are the orders in the pipeline? And with the prospective order pipeline, if you take into account your win ratio, where do you expect to end FY25 in terms of order inflow, and where will your order book be at the end of FY25?
So with L1, we're at 15,000 today. 4,144 is the L1. Breakup of this approximately is 2,500 is domestic and 1,500 or 1,600 is international. So that's the current breakup, which we hope that this numbers will from L1 will fructify into actual awards by end of March. So we are looking at order intake this year around 7,500 crores. Okay. And we believe that our beginning of next year, our order book to execute would be around approximately 16,500 crores.
7 to 7.5% in terms of an order inflow. But for the first 9 months, you've done 4,700 crore. So you are anticipating a big pickup in Q4.
Yes. So we've done 4,715 and 4,144 is the L1, which will fructify in the last quarter.
What about FY26, Randeep? What are the early indications? Will FY26 be as strong as FY25, a 30% kind of a top line growth, 12.5% EBITDA and 6% PAT margins?
Yes. So we have an order book which will sustain us for 2 years, plus new orders coming in. We know the margin profile. So we will maintain the EBITDA margins and the growth will be 25 to 30% as we are growing this year. So it's a healthy trend and the order book is supporting us.
Mr. Narang, one last question. When it comes to the international orders, we understand you do have some exposure in Bangladesh as well, and there have been some issues in terms of actual execution there. What percentage of your order book is exposed to Bangladesh? And secondly, when it comes to international orders, could you give us a sense of the EBITDA margin differential, between international as well as domestic orders?
Okay, so I'll talk about Bangladesh. There was a month delay because of the change in government in Bangladesh. But since then, we have started working aggressively and we are absolutely on track on Bangladesh in terms of the work happening, in terms of execution. So we have absolutely no problem on Bangladesh in terms of execution and support from the Bangladesh government, the PGCB being our client there. And there are 6 jobs, out of which 4 are EXIM based, and then 2 are government of Bangladesh. So 20% of the order book is from Bangladesh currently, and which is going to continue in terms of execution. The next question which you asked was on the Africa bit. What was the second part? Sorry, I missed it.
Differential between domestic and international orders.
Yeah. So the margin profile, international orders are in the range of 12.5 to 13.5, and domestic will be 10.5 to 11%.
Thank you very much for joining in. That's Transrail. The stock is holding up in the green. It's come off from the highs, 589. But it's done well compared to its issue price of 432 towards the end of last year. December 27th is when the company listed. It went to a high of 718. That's the 52-week high in its short span of being on the Lal Street. It's come off, but today on the back of good numbers, at least it's holding afloat. Get into